Okay, so this is General Electric, March of this year, so it wasn't that far away. As you can see, that the stock has actually bottomed out. It's been a selling climax before the index has actually stopped going down. So the stock has now been acting stronger from around about the 4th of March onwards. So as soon as the stock starts to go up and you see the index still continuing to decline, you really want to start thinking about drumming down to maybe a 60 or something like that time frame, and then maybe getting a piece of the action. Okay, so it's a nice buy at around $67, and it goes up to $12. So that's that represents about 100% return on your money.
Basically, sorry.
That's okay.
Sometimes we see the large volume like that. It's obviously some kind of climactic action, and then you say, or others will say, we need to see a cause being built up before we start going long. And there are other times where you see that kind of action, and I understand it's stronger than the market, but there's not a big cause like we saw on the other charts to set up that up move, and yet
that was probably done on really bad news of some sort. I'm sure if you go back and you look at General Electric, that's 752 million shares traded in one day. I mean, look at that high volume compared to all the rest of the volume.
Right.
That must have been some sort of bad news. That's given professional traders a golden opportunity to reaccumulate whilst everybody else is panicking.
So
that has to be heard panicking in that, or margin calls, or stop losses being triggered, or there has to be some sort of bad news. If you go back and you look up the 4th of March for General Electric, I bet there's some bad news on that day. Something really bad.
So because there's such huge volume and bad news, you feel that there's a transfer of ownership now to strongholders. You don't need to have that long cause build up.
No.
You just go right in on a test or
If the news is bad enough, you can generally just do that, and that's why, as you can see, there is no the market doesn't go sideways; it just goes straight back up again.
Right.
So that was obviously strong enough. That was obviously that shakeout, or that selling climax was strong enough just to push the market straight back up again without having the need to accumulate it. That's why I say that this usually happens on really bad news, because you don't get those bad news opportunities very often. So when you do, you have to just take it. You have to just jump in and just grab all of it, and then the result of that is the stock just went up. I mean, the worst that would happen is it would go up and it would come back down and retest that low. I mean, that's the worst possible scenario. So yeah, you could go long on there, and then the worst that can happen is it comes back down and retests on low volume. But if it starts to go up on high volume, then you've got to think, well, but it doesn't. I mean, that was so severe that the market just went straight up.
So would you buy on that day at the close, or would you wait for the next day or a low volume test?
I might wait for the next couple of bars. I mean, that one there is a good one because it's a down bar. The close is very close to the close of its previous bar. That second one is probably the one I'd probably go for, because that's telling me that the selling is completely dried up. That second one is a really good one, and I like these bars where the close is lower than the close of its previous bar, but greater than the low of its previous bar. Shows no selling pressure whatsoever. And then if you look at that bar is down, and look at the next bar on the Dow. The Dow is a widespread down. So, but that day there was a selling climax, but the Dow was up on that day. So I'm just wondering if there was some bad news on General Electric that day. But this gives you actually, I'll come to you in a second, but this actually shows you that there are opportunities out there that are waiting to be taken. If you don't take them, somebody else is going to take them. So you need to get a big advantage as you can in order to make as much money as you can, because that's what it's all about. You miss these trades, somebody else is going to take that money. This is your livelihood, potentially in the future, and it's you versus the rest of the world. So if you don't take them, somebody else will take them, and they'll take that money that should be yours. Sorry, Neil.
I don't remember exactly the definition of bag holding. Is that anywhere near it?
No, because bag holding has to be, I can show you an example of bag holding, but it has to be a gap down day with ultra high volume, the same as that, gap down with the next bar gap up. Well, you've got it gap down, fresh new ground, nothing to your left. That's bag holding. I can show you an example of that.
Narrow spread?
Yeah, very narrower the better. Next day should be gapped up. So Janet. Okay, so now this is your chart, potash corp of Saskatchewan.
Saskatchewan.
Wow, that's a mouthful, isn't it? So, come up, please. Okay, so I've got the microphone, so try and stay close to me if you can. So this is what you're here for. No, just need to hold it so that. Okay, we'll be okay.
Because otherwise it's really not.
Okay. Okay, no problem. I probably use my own doing this. Okay. Right. Okay. So, how would you explain that chart then? And this is one of the ones that you sent to me.
Well, we had right here at A.
Yeah.
Okay. So right here we have a down bar, closing in the middle, high volume,
Yeah.
and then right over here at B is a nice test.
Right.
Low volume, closing in the middle,
Yeah.
and that'd be a great place to go. That was a nice place to go long.
Right.
And then
Okay. Before you go there,
Uh-huh.
how do you know that test is going to fail or succeed?
because of the volume, closing the middle, down bar.
Yeah, but there's something else, and you know. Up bar on
Up bar.
average volume.
Right.
Right.
Okay. Yeah.
Okay.
Right.
Okay, so the next bar is up. That tells you that the test has now succeeded. So,
And then just kind of go into trending.
okay,
And up,
yeah,
up. And right here, well, actually, this bar I would have started getting I would have watched it a little bit closer because of the volume.
right,
Because the volume was high volume. And then the next bar, again, high volume, so I'm really starting to, as a matter of fact, this was actually, no, I was still in it, this one. I stayed in. And what I did was I drew a line right across here was where I set my stop.
right,
And then I just let it, then it came down, came back up, and I was starting to get a little bit concerned here, and then down, back up.
So how would you interpret the down bar followed by the up bar? How would you interpret that?
Down bar, closed off the low, average volume, so there wasn't any selling pressure. So I wasn't too concerned because there wasn't any selling pressure here. And then we had just kind of what I call that a little probing bar.
Right,
So a little probing bar, came back up, good volume, and then again came back down here. There was no selling pressure, and then it took off.
right. So what would you expect to see after that then?
Well, this bar right here, this volume.
How would you describe that bar?
High, ultra high volume, close off the highs, and I'd be watching it because I think there were a lot of people that were selling on this, but yet the next bar goes up.
So what does that tell you?
That tells you that there was a lot of buying. There was selling and buying on this bar.
Okay, so you would place the balance of the supply and demand in which court?
Well, demand's still in control
Okay,
because we're still in an uptrend.
But-
we have higher lows,
okay,
but demand and supply are starting to probably battle a little bit just because of the volume.
right, okay,
So I'd be tightening stops up.
okay. Would you place a horizontal line on that high? On that one? And then would you be looking for the bars to follow C, but before D, to see how they react off the top of that line?
Mm-hmm.
And then you've got to test at point D off the top of that line. Is that
Right.
Is that something you'd look at?
Yep. Well, I would now. I wouldn't have. I think I would have drawn a line right across here.
Okay, but it didn't come.
And
It
then
hasn't.
I probably would have, just because this was an intermediate, kind of an intermediate low from where it had come up, and then it had come back down in this intermediate low. But I see what you're talking about though back over here, because this was the last this was the last area of really resistance
Yeah.
before, and it broke through,
Yeah.
and then it came back and it's retesting. I see it. It's retesting.
That
Yeah.
high.
Yeah.
So okay.
Mm-hmm.
Thanks, Janet.
Is point D the fact that it went higher than the previous bar? Is that concerning to you at all?
No, it's like Janet says. I or Janet would have drawn a line across there. She would have waited to see how these down bars would have responded to that high, and then obviously you've got a test in there that tells you the market's still strong. It would have just bounced off or just sort of come very close to and then come back up again, tested, and then it's gone up next leg. That would have been absorbing any supply off the top of that. Okay, because it does actually look, that looks potentially weak, and that definitely looks potentially weak. But because it was tested, then you'd have to immediately close out your position. I've actually taken short trades off 2-minute S&P charts where I've seen a test like that. Next, I've closed it out at 1 or 2 ticks. But that's better than suffering a loss. And then you've got another leg up, so there will be, on this bar, widespread up increase in the volume will be taking out some short sellers on that high. But because they can see that the market's still strong, they're willing to absorb that and push the market up. Tony?
You said the bar in front of letter D is a weak bar?
It's potentially because you've got the close and the high is lower than the high of its previous bar. You've also got an up bar, narrow spread, closed in the middle with volume less than the previous two. You haven't got a buying climax in there, okay, but it has broken this top. So it does appear on this bar to be struggling to go up. But because it's tested immediately, you would then say that, okay, if there was any potential weakness on there, although you haven't got any buying climaxes or no high volume up bars, you could say this could be a temporary sign of weakness. The market could possibly drift down for a few bars, possibly test, but it doesn't. It does it straight away. If you're short on that one and you see something like that, you've got to get out straight away. Because I do it. I have done it. And I will do it in the future if I see that. Because look, you've then got, this bar looks as though it's struggling to go up, look. Okay, so it's struggling to maintain the upward momentum. But as soon as it's tested, then it can do it. But until that bar there, it does appear that it's now got 3 level highs and it's starting to make a lower high. Now, the next bar is down, but it's down bar, closed in the middle, volume's less than the previous two. If you are short on that one, you've got to get out on that one, no question. But, like I say, there is no high volume on up bars apart from these two. There's an increase, but it's only slightly above the average. Okay, so 60-minute chart. Does anybody want to come up and explain this chart to me? It's supposed to be interactive.
Right.
Come on now.
Just don't record it.
It's that one for the laser.
60 minutes.
Start wherever you like. It's the same chart as the daily chart we were looking at, but just 60 minutes.
Might as well start at the start.
Okay, I got the mics on my
Okay, that
A.
A would be it's well, I don't know what the indicator's supposed to be on there, but I think that there's too much. There's much more volume on A than
Right.
there is previously. So, and it's closing off below.
Yeah,
So it's actually a strong bar, not a weak bar.
right. But that indicator refers to the previous bar,
Okay.
which, you know,
And the previous bar is a narrow range, low volume, up bar. So that capped whatever move that was.
right. But if you look, you can see that it's got a date change on it, so that marks the
Oh,
opening
okay.
of another session.
Oh, okay.
So,
It would
yeah,
that would feel like a kind of, when I see low volume or lower volume, narrow range bars, that don't tend to go long for sure.
Right.
I
So
don't know the background.
widespread down. Pardon me. Widespread down on the A. Close off the low. It hasn't closed below the lows of the two previous bars, the red and the blue one in the background. So how would you explain the next few bars then?
It's an up move on not high volume, so this is average to below average volume.
Right.
It moves up, but it's not a very strong up move.
So how would you explain the bar to follow bar A then?
That well, I don't know what's back here, so I'm not sure.
Could that be a test?
Okay.
I mean, it could be a test if there's an up move back here.
Well, there's no continuation of the down move. Basically,
Right.
what you have is a higher low. The close is also lower than the close, but greater than the low of the previous bar. So it shows that if there is any weakness on bar A, it's not continued on the following bar. So then the next bar is up, which is positive because you've got an increase in the volume up to the average line. But then the market then does go up towards point B on low volume. At point B, you have
Higher volume,
right, and the spread is,
narrow,
and it's right at the end of the day, isn't it?
right at the end of the day.
So they're selling into that final hour of the trading session, which is why the next bar is gapped down.
Also, this is the end of the day.
Yeah,
Increase in volume.
yeah,
Expect the next day
yeah,
to
yeah.
go down. Okay.
So the next day you have a gap down bar, close on the high.
So that's actually a strong bar.
Yeah, potentially, but we don't know that for
Potentially,
sure.
we don't know for sure, but it's potentially a strong bar. And then the next bar is an up bar closing on the high with increased volume, so
Yeah.
that's a strong bar.
Yeah,
The bar after that is a narrow range, close in the middle, probably average volume, but I think it caps that move.
right.
It would. It's certainly not a test because if it were a test, it would be
Down
lower
bar,
bar.
yeah.
Right. So it's actually a weak bar,
Right, potentially.
potentially weak bar.
Okay, so what follows that then?
Three very narrow, low volume bars.
Upside or
Yeah.
downside?
They're actually down.
Right, okay, so that shows you that that last blue bar, 2 after C, couldn't really have been that weak, could it?
No.
Because what you have to follow that,
Had that been really weak, then
Yeah.
this would have gone down.
yeah.
Okay.
So you see the importance of not just jumping in as soon as you see one bar or another, but to follow and wait for confirmation. Can you all see how important it is to how you wait for confirmation?
I'm
They don't
sorry.
just go-
I apologize.
So you don't just go wading in.
I'll try to put it somewhere. That's okay. Sorry about that. I was trying to stay close to the mic, but I think with those three bars, I mean, the close of this bar and then these bars are all really close. The volume is low.
Yeah.
So basically, no selling pressure. But not a whole
So
lot
the path
selling
of least
pressure.
resistance is which direction then?
Up.
Exactly. So how would you explain bar D then, Alan?
Bar D is actually a strong bar because it is a little bit higher volume and it comes down and closes
Okay.
on the low.
Right.
I wouldn't think it would be a weak bar.
So you'd say that was strength
I think it was
ahead of the close.
well, yes, some
Okay.
strength.
So they're setting themselves up. So you now got strength in the
And they-
background.
Okay, then they do the same thing
Yeah.
at the end of the day, which is just basically not much of a bar,
Right.
and the volume's very low.
Yeah.
So then we open the next day. So this was whatever down move was there was very weak, and then that actually being a stronger bar, closing here. Now I wouldn't have known to go long the next day there at this point, but obviously it gaps up the next day, That's good. That's a strong bar.
Yeah.
It's not excessive volume, and it's up.
Right.
The next bar is an up bar, narrow range. It's a strong bar, actually. The volume's not so excessive.
Right.
To be a weak bar, would have needed to be a wide bar or different. And the next bar is high volume, up bar, closed just off the high. So it really needs to be tested.
Right.
And the next bar is F would be well, the volume goes down on F. It's still higher volume, but it also doesn't close below the low of this up move. So it's really not that weak a bar.
Okay.
I don't think so.
So what's the result of that then?
The result of that is the next bar is lower volume. It's actually, I think it's not quite a test.
It's a slight up bar, so
It's a slight up bar, and the volume is not excessive either way. And then G is the test. Well, no, the volume's not low enough. But, well, the volume's, now it's not lower than the previous two. So G is actually,
it's a narrow spread. It's on a down bar,
narrow
closing in the
spread,
middle,
down spark,
increasing the volume,
close
which
the
is
middle, and
yeah.
it actually may be above that bar, but it's close. So it's a strong bar, actually,
Yeah.
I guess.
But the result of that, what's the
And the
result?
result is that you get an up bar on increased volume, and the next bar is up on increased volume, but it's a lot of volume.
Right.
And that is now this was the end of the day here,
Yeah.
so I don't know that it really told you what was going to happen the next day, but the next day is obviously a strong, it's the opening bar the next day is wide, up, probably very high volume, and then, so it's a potentially weak bar, I would think.
Okay, so
Potentially weak, and
Yeah.
the result is that what happens is the bar afterwards, which actually is a test, is its volume less than the previous two. It's actually a down bar, so it's a test, and it's actually a successful test because the next bar is actually up.
right. Any weakness in that market you can see?
I think that could potentially stop the market from going up. But there may be enough volume here. It takes an awful lot of volume to stop that much of an up move, and the result of what happens right through, the next bar or two is going to tell you whether or not this can continue to go up.
Good.
But it's gone up a long way, and the most volume on the whole chart is right there.
Yeah.
And that's at the top.
But it's also taken out a previous high bar before F, and then
Yes,
it's been
it did.
immediately tested. So yeah.
So yes, it took out the previous high.
Okay. Thanks for
So
that.
on that last chart, if you were long, you still keep your long position.
Would you keep your long position, Alan?
I tighten my stop. I mean, right in there, if I were trading options or trading the stock, I'd be tightening my stop too. So
take
that
part of my
I'd be either taking, like she said, take part of it off or get your stop somewhere. You can move depending upon how much profit you've got and where you got in. I mean, you can actually looking for a place to draw. Well, we have a horizontal line.
Yeah, but that's the crosshair.
So it really it depends upon where you got in and what your risk reward is.
Exactly.
I mean, if you have a lot of profit and if you've gotten in over here and you've been able to ride that all the way up,
Got a 10-point
that
move.
bar would certainly tighten your stop.
Yeah. But you could have potentially at least a 10-point move in that profit. So
You can still keep going.
yeah. Tony?
Would you disregard if you see that bar in front of H as a sign of weakness? Would you disregard that because you're in such a strong uptrend?
I personally wouldn't, because bar F is low volume on a down bar after the previous bar was an up bar with an increase in the volume. So it's tested immediately, and the result of that is the next two bars are level, not down, and the market is able to actually go up. But you would have actually thought that there would have been weakness appeared right on the last bar of that close before the 13th at 1900 hours. So you would have thought that there would have been weakness coming in. You know, that would have looked like weakness. I would have understood if you'd have been caught short on that, because you could get confused on that. But you may have to drill down to a 15-minute chart to really figure that one out.
And that's the end of the day.
Yeah.
So that's an awful lot of volume at the end of the day when it not to continue up.
So maybe you'd be better off just looking at a 15-minute chart, you know, to make your thanks on.
Question. You have 3 level bars there, F to G.
Yeah.
Significance in there about the closes.
So kissing the volume close slightly off the low. The next bar is down on low volume less than the previous two, although it is above the average. Okay, the result of that is what does the bar do next? It's level, it closes level.
Right.
So although there's no buying pressure, there's no selling pressure. So the market's at an equilibrium.
Okay.
It's going sideways. It's not up or down. Okay, the next, if there was any potential weakness on that, where it's gone up and come back down again, it's countermanded by G. Right, so you've got up, and then you've got an up tail followed by a down tail. Now, just at the end, I would have been, you know, you could really consider that as to be a short, you know, not a short, but weakness that's appeared right at the end of the session. Because you've got an up bar on a fairly average spread, close in the middle, and the volume's quite high. It's almost as high as this, even though that's tested. So yeah, you have got strength in the background, but you potentially have weakness on that bar. So you could get caught out on that one. Okay?
Could that be just because it's the end of the day that the volume time?
Yeah, you could have short sellers right at the end. You could have longs that are unwinding their long position and shorting for the overnight session. But wide spread up, and then it's tested immediately. So that sign of weakness is immediately overwritten by bar H, because if that was genuinely weak, you'd expect the bar to be the next day to be right down. But if you look back, it's in an uptrend, and there's no real selling, there's no real weakness. There's only some temporary weakness, as we know, because of what happens the following day. There is some potential weakness coming. You haven't even got a signal, but look, the result of that is that it just doesn't happen. So yeah, that could be observed as a weak bar, but the next day it would be pretty academic.
What about the bar after 8?
Right, that's an up bar on low volume, closing the middle.
So I would feel really nervous here.
But you've got a strong bar right behind it, John. You know, you've got no selling pressure on H.
So the bar after H, you don't think you're countermand
No.
the strength you see on H?
That's right. You'd obviously have to wait for the result, but you're still higher lows, look. Still higher lows, so you're still in an uptrend. You've got to take that into account as well.
Isn't the 3 bar E and the next bar, or up bars on an incredible amount of volume? I mean, this is a salmon color.
Well, but the up bars on increasing volume. It's only that one that it's excessive, and the range is quite wide. That one appears initially to be a weak bar, but the next bar is a widespread up. Would take any weakness off that bar. Okay, that's a widespread up through a previous top. You'd expect it to be tested. Okay, that does appear to be a weak bar, but it's countermanded by that bar, which is a widespread up. Then you've got a down bar, and the volume's less than the previous two. Next bar is level, and it continues up. Okay, so Potash Corp of Saskatchewan, again 15-minute chart. Okay, so you've got a down bar, close off the low, quite high volume right at the end of the session. That tells me that is not a test, because the volume's far too high. There's a lot of supply around. You've also got too high volume on the up bars just before that one. That explains the gap down. There's no excessive volume there. It's tested immediately at C. You've got a low volume down bar, less than the previous two. You've got higher lows. The market then goes up, a little bit of volume there. It then drifts down. Okay, and then you can draw your line on top of that. It gaps up the next day. Here you've got increase in volume on these down bars right at the close of the session. That tells you that the market's probably likely to open up. So there's no weakness back here.
You're seeing the strength because your price trend bar, whatever you want to call that, declining. volume's declining more or less at the same place, except for those last bars, D.
Yeah. Yeah. So it's in a downtrend, but the buying comes in right at the close, and the next day it gaps up. And then you've got a widespread up, it's tested immediately after E. Got a nice test there. And the F, I think that's a test as well. And then it comes up to G where there's an increase in the volume, closing in the middle. Next bar looks like a low volume up bar. The market then drifts down, but look, point H, down bar, close off the low. Second bar is down bar, close the high. The close is greater than the low of its previous bar and the volume is low. Okay, it comes back down. It's still low volume as it comes back down into this H area, and then it tests at I, and then it comes up, and then you've got buying just at the close. Okay, you've got a down bar. As I like to see it, the close is lower than the close but greater than the low of its previous bar, and there's quite a lot of buying. There's two down bars right at the end, and then on K you've got a wide spread up. Now, you had the hourly chart which gave you the impression that it could possibly be weak, but look at the bars at L, they're coming down, but they're going down on low volume. Okay, it's only that blue bar now that you've got an up bar. As it approaches this high, the volume starts to increase. Now it looks as though it's going sideways from that point. Okay, so that's why you drill down to a 60-minute chart.
So what had looked weak on a potential weak on the hourly, now when we're going and we're drilling down into the 15-minute, we're seeing that there's really no selling pressure on those down bars, and with the exception of that, and then we have that one up bar 4 after L that closes off the high, but yet the volume is still good. The volume's okay.
Yeah,
There really is just no selling pressure on those down bars.
that's right.
That's the whole key to this.
Yeah, that's how you know that K is a widespread up through a previous high at G, but then the result of that is at point L there's no selling pressure there. This is how we always wait for the result of that. Right, okay, so pot against the index is that the index is now starting to fall, but pot is still moving up. So pot is now outperforming the S&P 500. Right, so it's still a strong stock. Right, as of mid-afternoon yesterday. Okay, so you've got widespread up, increase in the volume, it's broken out through these highs, and then it's still going up, whereas the index is falling, so the stock is actually outperforming the index. Okay. Right, Goldman Sachs. Okay, this is on the 14th. Obviously bad news. They have to really raise $5 billion to repay the $10 billion in government rescue funds. Okay, not very interesting if you ask me. We're in an uptrend, but what that relates to is this down bar on point A. Okay, really, really high volume on this down bar. That was bad news. Okay, so if that news was so bad on that day, if that was such bad news, why has the stock gone up? You know, why has the stock gone up after that bad news day? That shows you that you cannot rely on the news in order to make trading or investment decisions. You have to assume that the news is hostile to the true market intent. And the true market intent is to shake the public out and move the stock higher, which is done. Okay, so at B, I think we have no selling pressure there. We're on the top of a trend channel. And look at point C. It then manages to go back up. We've got bottom reversal at B. And look, there's no selling pressure. You see how the close is very close to the close of its previous bars on all three of those bars? No selling pressure. Look at the volume, it's low. Next leg up, breaks that high, and then it starts to make a little bit of weakness there.
Hey, so, you know, one of the things that's always kind of confused me, or not confused me, but it's worried me, is that, you know, you'll have these trend, you know, you'll be in an uptrend like this, and it's obviously in an oversold position with our trend lines the way we have them drawn there. But yet, I think what I'm hearing, or what I'm understanding, is that the no selling pressure trumps wherever it is in the trend. Is that right?
That's at C, yeah.
At C.
Yeah.
Because I saw that and I thought, oh, it's oversold. You know, path of least resistance is back down. But yet,
No, if it's above that trend channel, that's overbought, not
okay,
oversold.
so
If
then
it's down here, it's
just
oversold.
retesting the top of that trend channel.
Yeah.
And then overbought, not oversold, overbought.
Yeah, overbought. Well, potentially it's overbought, and that bad news shakes the market out. Because it's on a widespread down.
And then it's retested immediately at B.
B, yeah, but it's the result of that. You don't say, right, okay, A is weakness, because you're following the crowd, you see, you're following the herd. The herd is all panicking, you've got that bad news.
Right.
they're letting them have it, and they're all saying, yeah, we'll take it all, thank you very much. Look at the result. If that news was so bad, why's the market gone up?
Right. And the
You
next
cannot
bar was
rely
up.
on the news.
And the next bar was up immediately.
So, A really is fine. Repeat what you said. B is a successful test because even though it would gap down, I would be concerned about the gap down. But what you're saying is B really is a successful test.
B to me is no selling pressure. It doesn't break the lows. It's a fairly narrow spread, close on the low, and I would imagine that the volume is less than the previous two.
Yeah, and it is.
Right. And that C is the point that you really want to start getting excited on the long side.
So C is what you might enter.
Yeah, very
I'm
probably.
with you, Janet. I would be watching this and say, I'm looking for a short here because it's up.
But you see, the thing is, you've allowed yourself to be emotionally attached to the news because you're thinking exactly what everybody else is thinking. And I've already proved to you now that you cannot rely on the news. In fact, you should use the news as the opposite of what it's saying. If you've got good news, you should be thinking, hang on a minute, we've got good news, is the professionals or the insiders distributing? And if it's bad news, even though it's in an overbought situation, you've got a shakeout right at the top of an overbought situation.
I actually was watching this and played it a little bit, and after B, there was a gap down.
Yeah.
And it was on low volume.
Yeah.
And then it reversed and went up right after B.
Yeah.
And if you were inclined, you could have taken that reversal and.
Or C. C would probably have been the safest place to go in because it's down bars with very narrow spreads, close very close to close of its previous bar, and it's sitting right on the top of that trend channel. You're almost guaranteed to make money. That's if you're not scared out of your wits. Well, a lot of people are. You know, I mean, you know, it sounds funny, but.
And they sold, the company brought out a bunch of shares right in there somewhere too.
Yeah.
So they.
That widespread down on the high volume was they had to raise $5 billion to repay the government. And I'm wondering if they actually did have to repay the government. You know, you have to be very, very skeptical about all these things because you never know the truth, and because you never know the truth.
So, Josh, one more thing on the prior chart. D and E, what's the significance of those points?
Of
D and E, so I don't think we talked about that.
okay, right. Well, D is clearing an old top to the background, and the volume is only average, but the next two bars start to go up on a low volume. Okay, narrow spread, a range. Next bar is a wide spread down, quite wide, and then next bar I think is up on low volume. So then that's when, if there's any, there does appear now to be weakness there because you've got a wide spread down. You've got these two narrow up bars followed by a wide spread down, that's weakness. It's then gone up on low volume. So then you've got a down bar, close in the middle, close near the low, just off the low. Volume's less than the previous two. And then you've got quite a bit of supply on point E. Now, Friday yesterday was a continuation. So the prices were falling. And I can't really sort of say anything about that bar, but it looks as though now that the market is going to come back down to the top of that trend channel.
But the last bar, the volume is very low. It's going down.
The market hadn't closed yesterday. When I took that, it was mid-afternoon yesterday.
Oh, okay. So maybe it's just after this, or maybe.
So as you can see, as a 1 hour chart, you've got your two lows and you've got your high, which is your Wyckoff trend. You've got breakout, point A. Point B just before the close of the market. You guys wanted to see this, didn't you? Because I'm doing this for you guys, so I can slow down a bit now because I can slow down a bit because I'm doing this specifically for you guys. Okay, so you got a breakout of the uptrend. You do have what appears to be weakness. You've got a fairly wide spread. Look at that high volume, and then the next day it opens down, and then they bring it back up, but very interestingly, at point B, there's, that supply could not have been genuine. That really high volume on that up bar must have been absorbed. Because look at point B, right at the end of the session. There's no sellers there at all. You've got that down bar, you've got that increase in the volume. The next day, the market gaps up, look, you've got a gap up bar, you haven't got excessively high volume, and you've got a down bar closing off the low, increase in the volume. Next two bars at C, no selling pressure, look. Okay, so if there was any weakness at point A, point B will tell you that it's no longer there, and point C definitely tells you that there's no selling pressure there. Okay, so the path of least resistance is up. Now, that one on point D is an up bar with quite an increase in the volume, closing off the low with the next bar down. Okay, that's weakness. Okay, now that bar there is not a strong bar, it's down bar, close on the high with a really wide spread, and the low is lower than the low of its previous bar. Look how high that volume is, there's a lot of supply there. Okay, now that's weakness right into the close. Now the next day is a well, you would normally see that as a hidden up thrust, okay, but you've got nothing to the left. Okay, so it's gone up and then they've knocked it back down. So that to me is supply swamping demand. It's gone up at the open, and then the supply has swamped demand, and then it's come all the way back down again. But interestingly enough, the volume is very low on that opening bar. So, I mean, that could have something to do with the market opening at 2:30 London time, and that bar only may represent about 30 minutes worth of trade, because the hourly charts go from 0 to 0, and 9:30 a.m. Eastern is the open of the market. So there's only 30 minutes worth of trading on that first bar, so that could be why it looks a bit strange. So next bar is a widespread down, quite a big increase in the volume, but then it then starts to fall on low volume on these two bars. Now look at that, it bounces off the top of that supply line, it bounces off that, and then E, you've got down bar closing slightly off the low, and the volume is less than the previous bar. It's below average, but it's not less than the previous two. The next bar is up, which is a good sign, and then that's right to the end of the session. That could be construed as a weak bar because you still got lower highs there, okay? And then that bar relates to that one, I think. Or is it? No, that one is that one. So that's quite high volume on that up bar, and then the opening of the session, it's just around about the average, so it's not really significant. Now, fairly widespread down, you could see that as a top reversal there, but look, it bounces off the top of that trend channel, the close is right on the top of the trend channel, and then the market bounces off it. Very interestingly though, it then goes up on low volume at point G. Right, so that volume bar relates to that bar right at the close. As you can see, it's going up and the volume's really low back here, and it's approaching a previous top at point D. And it's the fact that it's making lower highs tells you that it's making lower highs, it's now in a downtrend, so the market's now weak. All right. Point H, you've got a top reversal, you've got a lot of selling right at that bar, right at the close of the session. So if you wanted to know what the balance of supply and demand was, it would definitely be supply swamping demand. There's a lot of high volume on that up bar there, and the market's turned really negative, plus you've got this high in the background. So that high is not going to get broken. Okay, so the market trends down, it bounces off that trend channel, but then you get a top reversal, and then you've got a low volume up bar, close in the middle, and then the market then breaks the top of that trend channel. And look at that, the market goes up, and then you've got another reversal. So the effort is to go up, but the result is it gets pounded back down again. And obviously yesterday, it's quite high volume on that down bar as well. So that's because it's got a higher high than the high of the previous bar, but it's closed on a low, and the spread is really wide. That's quite a lot of weakness, and it's now back down into the bottom of the top of this trend channel. So obviously yesterday morning it was gapped down, and it just continued to go down. So I think that stock is going to come off, but the index is coming off anyway.
Is the financial leading the rest of the market again?
I think that financial stocks, I think the insiders have now rotated out of financial stocks. They rotated into financial stocks on that really bad news. They've ridden up the market about 10 or 15, 20 points. Now they've now distributed the stock, and they've now turned negative now. So they've made their money basically. So now's not a time to get. I wouldn't say that now is a good time to get into financial stocks. I think they've made their move, and now they're going to come off. And as you can see, we've now got a downtrend. We've got the high volume. This is a 15-minute chart. So you've got high volume on an up bar, really high volume. There's a lot of distribution into that. Next bar is down. As you can see, it then goes up to point A on low volume. Look, nice low volume. Then the market trends down. There's no stopping volume. Okay, so the market just is starting to just gyrate. It starts to come up, increase in the volume as it approaches this, and then you've got another reversal. So it goes up, got fairly average spread, the close is quite close but not too far away from the close of the previous bar. It's quite high volume. Next bar is a wide spread down. Okay, so yes, you've got a test at point C, test-like bar. There's no stopping volume in the background. Okay, there's no shakeout. There's no selling climax. If you look at that bar there, that down bar, fairly widespread, closing the middle, and that volume, I mean, that volume is quite low, so it's not going to go up very far because there's no stopping volume. And you've got an old top in the background. So come back up to the old top, it's now making lower highs. Okay, it's not breaking that high because it's too weak. Then comes back down, there is some buying right at the end of the day, fairly average spread, closing near the low, quite high volume. Next day is gapped up, and then at point F you've got another weak bar, up bar, volume is less than the previous two, and you've made a lower high, okay, than the high at point D. The market just then trends down. You've got another weak bar at point G, then up bar on quite low volume. The market then trends down. At point H, you've got some, that's almost a white-off spring, but you've got nothing in the background, okay? So the market is then, starts to come down on quite low volume. There's no stopping volume, don't forget. So because there's no stopping volume, you're probably just going to get the next few bars going up before it will then, it's basically a temporary up move in a bear market, basically. And you will get those. If you don't have stopping volume to the downside, the market will probably not go up too far for too long. So as you can see, the market then goes down on low volume, it's come back down, the bars are starting to narrow out, okay, but there's no stopping volume, so the market does not tick up very far, okay. Then you get the high volume just as it approaches point I. It starts to close way off the highs. As you can see, the bar following point I is a fairly average spread, closing way off the high. Volume's now very high. You've got another weak bar to follow, fairly wide spread, close in the middle. Volume is still quite high. So that's 1, 2, 3. Yeah, so the volumes, that's actually a low volume up bar with a fairly wide spread, close in the middle. That's quite a weak bar. And then you've got really high volume into this bar J. And then the next day, yesterday, Friday, was gap down and then just collapsed. Okay, so that's I expect it's now in a downtrend, but it shouldn't break that low for a little while to come. So that's how I would see it.
Unless they catch Bin Laden.
I have always thought that Bin Laden worked for the CIA, so I don't think it would be in America's interest to catch him. No, America needs an enemy. It used to be Russia, so who is it now? It's now, it's now some guy they can't catch. I mean, how is it that a country this size, with its resources, with the defense industry runs into billions of dollars a year, can't catch one single person?
He probably died in 2002.
You don't know, but I believe he. You see. See, the thing is, he established his working relationship with the CIA back in 1980 when, the unpleasantness in Afghanistan was going on. So, anyway. So, overall, 60-minute chart to get close to the live edge. You've got two highs and you've got a low, so you draw your trend channel. Very interestingly, it rejects the top of this trend channel. You've now got a low volume up bar, close in the middle. That's probably a very good opportunity to go short. You've got a top reversal at point B. You've also got a rejection of that the top of that trend line. So what's that? 1, 2. That's 1, 2, 3. So you've actually got no demand bar. You've got this two weak bars up here. This bar is actually quite high volume on this up bar. You've got no demand. You've then got hidden up thrust. Comes back down. Tries another attempt to have a go at this bottom of this top of this trend channel. You've got a top reversal. That's quite weak. Then you've got a low volume up bar, which is blue, close in the middle. Okay, the volume's quite low. Next bar is a wide spread down, that confirms it. No stopping volume, look. Comes back down on fairly wide spreads, and then it just bounces off. Tries to go up, bounces again off the top of this trend channel, and it comes right down. You've got quite high volume on this down move, which is quite weak. And then yesterday, just gaps down. It's gonna take out the bottom of that trend channel probably, if it hasn't already.
But Sam, on that one, toward the last few bars, it seems like we're going down on lesser and lesser volume.
Yeah.
Would you expect a little up move?
I'd probably expect a small bounce off the bottom of that trend channel. But look, it's making lower highs, you see, and you've got real weakness right on the close of Thursday. I mean, that's major, and the overall picture is weak anyway. Look how it's responded to that top of that trend channel. just completely rejected it. They're just not interested. Specialists is not interested in the top of that trend channel. So it's in a downtrend on the 60-minute chart. Overall, it's looking weak. The market overall is looking weak. The daily charts on the indexes are looking weak. So, you know, we've seen our move in the financials, and now they're coming off.
There's another way to look at the charts, to look and say, just look at where all the big red volume is coming in, you know, which is all down volume. That's bigger than any of the blue volume going up.
True, but the highest volume is on that one.
Right.
If you're say I'm taking from Thursday onwards, the highest volume is on that point C, and that's a down bar. That volume is quite high. Gap down. Yeah, it's going down on low volume. But, you know, the first, that only represents 30 minutes of trading. So that would have closed on its low. If you add those two volume bars up together, that would have been really high. And then it's just sinking right off. You see, it's making lower highs. If there was any strength there, it's not responding to that. It's just coming right off. So it's in a downtrend. Overall, it's in a downtrend. So I can't find anything positive about that. So we'll look at one more. So that's your charts taken care of. Okay, this is for you, John. This is the U.S. Treasury 30-year U.S. Treasury bonds. So back in October of last year, we had two lows and a high. So we draw our trend channel. We broke it. We went all the way up. Now this represented the flip side of the market, which would have bottomed out on the Dow and the S&P. So that would have represented the lows of the S&P and the Dow. Okay, so obviously those buyers have come back in around about December time. So obviously this 30-year Treasury is reversed. So I drew two highs there, came back up quite high volume, and then it came back up on low volume, and then it's just still in a downtrend. Now there is some stopping volume there, but I would expect a retest of that. But I think it's going to probably break up through, and then it will probably come back off again. I think that the 30-year Treasury bond. Still, having said that, if the indexes come off, then this should go up. So, but this is a floor traded contract, so you probably get a better idea if I looked at the mini contract for these.
What do you mean by floor traded? You mean it's not electronic?
Yeah, it's not an electronic market, so it's still a floor traded contract as far as I'm aware. You do have some buying right in the middle of that 50% retracement of that trend channel that comes back to here. But that looks fairly weak. It's come back off. It's gone up on low volume look, and then it's just trending right down. I mean, if you look at this chart quite carefully, there are actually anomalies in the data. That bar there isn't fully formed. That bar there is not fully formed. That bar there isn't fully formed. So there's actually, the data is not even that fantastic.
Is there a shakeout? In other words, right toward the end of the chart, you
There.
have a gap down,
Yeah.
and it's below all the other points to the left of it. It's almost like a,
Back into this trend channel. If that's genuine, then it should come back down and retest that
a low volume.
on low volume. If it's genuine. But we don't know that yet.
Right.
So that will be next week, the week after. That's something for you to look forward to. Look forward to, yeah. But if the treasuries rally, then the index should come off, because this normally does the opposite of what the indexes do. And I'm sure that if I laid up a chart, if I split the window and did a comparison at that peak back in December, then that would be the trough of the Dow Jones. So yeah. So if you're not really that great on indexes and you want to, say look like an inverse, then the 30-year Treasury is probably be a good one to use as a flip side. So.
It looks support resistance. It's bouncing on support to last October.
Yeah. That was your trend channel. It broke obviously through it. It's come back down. It hasn't even come back down to touch it, but because you've got this widespread up closing off the high, after I drew this line sloping downwards, I didn't think it was really worth drawing a proper trend channel, because then that might have you know, it might have skewed up the data a bit, but it's quite clearly in a downtrend from these two highs. So, but then it's now bounced off. It's fairly widespread through there on an increase in the volume. And then as you can see, it's quite weak there as it's trying to come up to the top of this trend channel. It just bounces off it. Then it looks as though you've got narrow spreads now, closing in the middle. So it is actually going up on a decrease in volume. So it'll be very interesting to see how that plays out.
And so when you also look at this wide spread bar with this one here.
That one.
The obvious weakness here with very high volume compared to the previous dozen bars. Then you look at this down bar, potentially take out 3 from the right.
That one.
Yeah, that volume has a good bit less volume than previous, which was obvious weakness there.
Yeah.
Would you not have expected, if it was really turning around, would you not have expected much larger stocking volume?
Depends on the size of the market, John. See, I mean,
Treasury is a pretty big market.
yeah, I mean, you could say that was potentially an upthrust because that's a stop loss catching maneuver. Because look at that, all those shorts there would have been completely taken out by that.
But boy, it's closed so much in the middle.
Yeah.
I'd be really nervous about that. And then the next bar, closing on this.
But look how it responds right at the close of the day. You've got that, which is high volume up bar, close in the middle, and then look right at the end of the session. It's not going to break that, is it? So that was stop loss catching maneuver.
Now this is a daily chart.
Yeah, that's a daily chart. Yeah, so on that day it was a widespread up, close in the middle, and then towards the end it just petered out. So it's been in a downtrend. But if there's any strength there, John, it's going to have to come back down and retest it at some point, which it hasn't done yet. So that's what you're looking for. You're looking for a retest, possibly of the lows, possibly higher, but that's what you're looking for. Okay? Okay, folks, thank you very much for coming down. So, just before I leave.